Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and this is your quick look at the stories we've been covering that you need to hear about. Gold had a bumpy time this week, starting the period above the 1900 per ounce mark, but dropping to about the 1870 level on Thursday. The decline has been blamed on factors such as U.S. jobless claims, which fell below 400,000 this week, and a record high in the country's service sector index. Looking forward to gold's future, I heard this week from Gwen Preston of Resource Maven. She has an optimistic outlook on the yellow metal and is also positive on gold stocks, which she said are still historically cheap relative to the price of gold. When asked where gold investors should focus, Gwen said it's important for each individual to find out what works best for them. For example, she pointed out that high-risk stocks aren't for everyone, and there's still opportunity in lower-risk entities. With that in mind, we asked gold investors on Twitter this week if their portfolios contain mostly high-risk stocks, low-risk stocks, or a mix of both. The poll was ongoing at the time of this recording, but most respondents said their portfolios have mostly high-risk stocks or a mix of high and low-risk stocks. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. We've been talking a little bit more about copper lately as it continues to experience price momentum. While it's all very well to discuss the supply and demand fundamentals moving the market, what's the best way to get involved? I recently asked Byron King that question. He writes the Whiskey Gunpowder newsletter, and in his opinion, those who want to make money off the current copper price need to invest in large players in the sector, such as Freeport-McMoRan, BHP, Glencore, and Rio Tinto. Byron didn't discount the potential for smaller companies to make gains, but he did emphasize the length of time it takes to bring a project into production. 15 years would be fast, and 20 to 25 years would be more normal. That means a smaller copper stock might surge if it makes a discovery, but it's unlikely to produce during this cycle. We're going to end this week on cannabis for a change. INN attended a talk at the latest Prohibition Partners live event, and the message from the panelists was clear. Cannabis investors need to be looking at the U.S. market right now. We've heard this sentiment from many market watchers before. Overall, there's a sense of disappointment about Canadian cannabis companies. They had an early lead when the country legalized the drug, but since then they've underperformed financially. As Thomas Carroll of Stansberry Research told the audience, those who don't get involved until the U.S. puts new cannabis legislation in place will be late to the party. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. See you next time.